The scale of the crisis that China is about to experience is much bigger than you imagine. China is about to have its own version of the 2008 housing crash, where major corporations such as Lehman Brothers failed, thousands lost their houses, and the global economy tanked into a recession. The only difference is China's housing crisis seems like it will get much worse. A housing crash on steroids, if you would like. This is China's GDP since 1960. Until the 1990s, its economy was barely growing, but at the beginning of the late 1990s, China's economy exploded. It grew from $500 billion in 1994 to almost $15 trillion by 2021. That is probably the fastest economic growth in modern human history. It sounds almost like a miracle. But not everything is sunshine and rainbows. Behind fancy numbers and shiny buildings, there is a dark side of it. One of the main sectors that was driving China's GDP is the real estate market. It accounts for 13% of the country's GDP and makes a third of its economic output. That includes houses, rental and brokering services, industries producing white goods that go into apartments and construction materials. The only problem is that China has built way too many homes than it needs, to the point where it has turned the sector into a bubble. China has at least 65 million empty houses. That's as much as the entire population of France and half the population of the largest country in the world, Russia. It even created replicas of the Eiffel Tower in Paris, the historic Austrian Alpine village, and even Swedish and Italian villages. The only difference between the real Eiffel Tower and the Chinese version is that the Chinese copy of Paris is empty, where no one lives. But why has China built 65 million empty houses? How did China end up creating the biggest housing bubble in history? And how is it finally about to collapse and take down with it the entire global economy? We will answer all of these questions and many more, but before we do that, give this video a thumbs up and let's dive in. You have multiple options when you want to invest in the United States. You have the real estate, the stock market where you can start investing with as little as a few dollars, government bonds, or at least keep your money in the bank, generating some interest over the years. You're not worried that on one beautiful morning the government is going to intervene in the business, kidnapping a CEO just because he said something against the president or the ruling party. The stock market has been stable for over a century, with S&P 500 growing at an average of 10%, and US government bonds are considered the safest investment in the world, since the United States has never defaulted on its debts. The credit of the United States is built on centuries of stability and responsibility. But not all countries are like that, especially China, where the government controls pretty much everything. There is a lack of transparency and freedom. CEOs who oppose the ruling party can disappear overnight, and their companies destroyed. Nothing is going to save you from the anger of the ruling party, even if you are the richest person in the country. Even an average person knows that in China. So not many are willing to risk investing in the stock market or government bonds. That's why everyone in China turns to real estate. At the end of the day, you can't just save money. You have to invest it, especially in China, where people save much more than the United States or pretty much anywhere else in the world. There are far more second home buyers in China than first home buyers, and the number of third home buyers are almost as much as the first home buyers. Real estate is your best option in China. On top of that, China is isolated from the rest of the world, and every Chinese doesn't really have access to the US stock market, and getting money out of the country is not an easy job. So we can confidently say that real estate is your only option. So let's go back for a moment to the graph that we took a look at the beginning of the video. This unprecedented GDP growth was mostly fueled by real estate, which now has turned into a bubble that's ready to burst. That's how properties in Shenzhen or Shanghai became more expensive than in LA, despite the fact that GDP per capita in China is $10,000, while in the United States, it's over $60,000. If these 65 million homes are listed in the market tomorrow, it will definitely crush the market. But not the economy, since China is simply too big. Its population is almost 5 times the United States. However, that's just a tiny part of the problem. When a developer wants to build an apartment block in China, before even starting the project, the developer starts selling apartments before they are even built. Using that cash, the developer starts building the rest, and in the process selling the apartments. At the end of the day, it often takes years to complete such a project. But because the economy is booming and hundreds of millions of people are buying homes, the developers in China can't wait for the project to be completed. So they use the cash from previous projects to start building new apartment blocks in hopes of selling them in the process. And while they are building the new project, they use the funds from it to start a third project, and so on and so forth. And if there aren't enough funds to start new projects, the developers can simply take loans to continue building. Banks are more than happy to provide the loans since they will be backed by real apartments that are in high demand and rising in prices every year. There is no way they will ever go bankrupt, since if they can't afford to pay back the loan, they can simply sell the apartments to do that. The developers kept taking huge loans to continue building, and people kept taking mortgages to continue buying. Does it remind you of something? This strategy only works when everything is growing. When the economy is booming, people make money and continue buying homes. But what happens if the economy stops growing? What happens when people are forced to stay at home because of some kind of a virus and would no longer make enough money to buy new homes? The answer is simple: Evergrande. It's so weird that people always make the assumption that things will grow forever. Humanity is pathetic, to say the least. Anyways, the unthinkable happened. A virus spread throughout the world, and the Chinese government implemented a zero-COVID policy, where it forced the entire population to vaccinate and stay at home long enough to finally get rid of the virus. So the Chinese developers began to crumble. Since people stopped buying homes, the money stopped coming in. So the developers couldn't finish hundreds of apartment projects they have started back before the COVID. The first major developer that began defaulting on its debt was Evergrande. It's the second largest property developer in China and the 122nd largest company in the world. With over $300 billion in debt, its only hope was a government bailout. People stopped making mortgage payments since the construction of their homes was being delayed, causing an even bigger crisis. More than $220 billion worth of loans could be tied to unfinished projects. China's government issued $148 billion in loans to help property developers. Mortgage holders have been given payment holidays without it affecting their credit score. The government perfectly knows that the bubble was foaming, but it was perfectly fine with it since it was driving those annual GDP numbers. And now it's trying its best to burst that bubble in a way that it won't crush the economy. Whether it will be able to do that or not, only time will tell. However, there is an even bigger problem. People have lost faith in the housing market. As people view the stock market and government bonds as unreliable assets, they will now view real estate as an unreliable and speculative asset as well, which means no more 7 and 8% GDP growth from now onwards. That doesn't mean people will stop buying real estate, but it would be much slower than it was before the pandemic. If the bubble will burst as it was in 2008 in the United States, the crash could be much worse. And secondly, if it happens now, inflation globally will only get worse. First of all, we're not yet out of the pandemic, and Russia's invasion is causing a global energy crisis. The world economy is barely surviving. Europe can't even fix its energy crisis, the US can't lower the rates, and it's suffering from highest inflation in 4 decades and a potential housing crisis as well. So the implications of the Chinese housing crash could end up taking the global economy for another few years of recession, if not a depression. Thanks for watching and see you in the next one.